Dipan, what's your sense of what this series may throw up for us? Another range-bound session for the Nifty, or is there a big breakout in either direction you sense?
No, I think given that the trend is range-bound for the last few weeks, months I should say, there is no specific reason why this range should be broken. And more or less I think we expect the Nifty to trade within this 200 band given 5,200 as the midpoint. So you take 5,000 on one side, 5,400 on the other side. Those should be the support and resistance levels. And more or less sideways movement, low implied volatility. And I think after the result season more or less drags to an end, it will be again a period of lull in terms of absence of news flow. In any case, May is a slow month, so unless there is something drastic or negative, like some kind of a geo-financial crisis, I think one should expect a very sideways movement. But stock-specific action will take place, and I think that the results are coming thick and fast and throwing up lots of surprises and opportunities as well. So I think that the market analysts and fund managers will try and sift through these results and pick the winners for the next quarter and the rest of the year. So that's going to be the focus area for the street, at least for the month of May.
Because it's a low action month, as you said, do you think it's best to play it from the mid-cap end?
Yeah, absolutely. I think that stock-specific action will pick up, and we are getting a lot of news flow from the companies. Managements are coming out with their forecast as well as how they expect the year to roll out for them. So it's going to be stock-specific, and it's going to be more and more of mid-cap. And it's only around the time maybe the monsoons kind of start breaking in, and maybe there's some more clarity on that front. Maybe inflation comes down, some of the macro level factors improve for our country. It's only then that you will see another fresh wave of buying coming in from the FIs in the large cap, which could take the index beyond that 54-5500 level. But I think that's at least a couple of months away, more like an event middle of June or July. That's assuming that the monsoons are in line and they are normal, slightly above normal is what is the expectation. So that's the big, I think, question mark for our markets, assuming that globally there are no further challenges or issues, and all the various crises which are being faced in the European economy are dealt with, and confidence again comes back into risky assets. So that's a big question mark as global markets have to give that caveat that we don't know what is happening over there, and there could be a negative event just around the corner, and the markets could correct from there. But assuming that nothing negative comes out from there, I think for our markets the focus has to be the monsoon, and if that is rolling out well, then only then will you see this resistance levels being broken. And yes, stock specific action will be the key theme, at least for the rest of May and for at least middle of June or so.
Dipan, the earnings trip-ups have come up in some of these equipment makers. I mean, Siemens, ABB, they've had rather big blow-ups, but the stocks don't react that violently.
Yeah, you just have to have a look at the order inflow. And although Siemens did not come out with decent set of numbers, the order inflow was quite spectacular. And that's the case, I think, with a lot of other capital goods manufacturers, that what the results are is a reflection of how the year has gone by. But the coming year, forthcoming year and the year thereafter could be quite fantastic for these companies as these orders start getting converted into revenues. At the same time, the operating leverages will start kicking in, and a lot of these companies, have kind of got these clauses for raw material increases as well. So to that extent, or at least to some extent, they are protected on that front. So my sense is that the capital goods manufacturers could be kind of a leadership mode maybe for the next fiscal year or so. It's an interesting theme at this point of time. If you look at it broadly, they have underperformed the market over the past 12 months or so on account of rather tepid results coming out from the entire sector. But that may soon change, and if the capacity build-ups continue and order flow remains quite strong, then I think whatever P multiples which we are seeing are in the nature of historic P multiples, but forward-looking multiples would again seem to be quite attractive. So I think one needs to keep that in mind. And I think the big result one looks forward to is L&T. and that kind of will drive the sector as a whole as well.
Dipan, this pocket is generating the highest interest. Which number stood out for you from the banking space?
So I think that two themes within the banking sector are quite evident and attractive. One is the private sector banking companies. They've all come out with spectacular set of numbers, better than street expectation. The core banking has improved over there. Fee-based income also has picked up. More or less gained market share at the expense of public sector banks. So that is one theme that we like, and with usual disclosure, we have investment recommendations in several private sector banks. The second theme is the NBFCs. They have come out with good set of numbers, whether it is Shriram Transport or M&M Finance, and we saw India Bulls also. So the NBFCs also have come out with decent set of numbers, benefiting from stable net interest margins and lower provisioning norms. So low provisions required at the expense level, so that's helped them. Public sector banks have been mixed, and that really is the problem with that segment of the market, that there are some quarters they do well, some quarters the results are below expectation. That kind of a straight line secular growth is never there in this segment, and therefore I think although on valuation they appear to be quite cheap compared to the private sector banks, end of the day I don't think that they have given any spectacular returns over a 2-3 year period, and this kind of volatility in earnings I don't think is going to change, at least in the near future. Within the public sector also there are a few exceptions. With the usual disclosure, what we like is Bank of Baroda over there, and another company we're looking forward to in terms of corporate numbers is Central Bank of India. So there are a few pockets in the public sector which kind of display decent results, and there's some amount of predictability in their earnings. But most of them, I think there's high degree of volatility either on account of provisioning or extraordinary expenditure or variation in net interest income, and all that is very difficult to put a handle on, which makes it difficult to predict the results and the stock price performance. So I think investors should be focused more on the private sector side of the industry, whether it's private sector banks or private sector NBFCs.
Rahul, for you, how would you approach a stock like IFCI?
So I think again it is event based, and while the fundamentals keep on improving and the net asset value or the total breakup value, so to speak, of the company is significantly higher than its present market price. But then I think all depends upon whether it's able to transform itself into a bank and whether the RBI will permit it to do so. So I think that investors who have a slightly long-term kind of a view can certainly take a look at IFCI. And one needs to go a bit deeper into the results, and my sense is that if it is evident that the company's performance, the core banking or the core lending performance is stable and is likely to improve, and the provisioning requirements are likely to remain stable going forward, then even irrespective of whether it's able to convert itself to a bank or not, it may turn out to be a good investment proposition. But as I said, that one needs to look a bit deeper into the balance sheet and the exact performance for the last year as well. So assuming that everything is okay in terms of the loan book of the company, this could be an interesting investment opportunity going forward.